Hello everyone, welcome to the daily market updates video where I talk about today's market action. I also talk about my learnings from today and most importantly, my insights moving forward. So without further ado, let's jump on right into the analysis. So as always, we will be starting from the weekly time frame and then we will be drilling down to the smaller time frames. And then we will be discussing some miscellaneous things which are important as far as markets are concerned. So let's start with the weekly time frame. So today was a very important day as far as weekly time frame is concerned. And the reason why I say this is because remember yesterday, if you look at the charts, we closed below the 26-day moving average. But today, and this happens to be Thursday's closing session, wherein we actually reclaimed the 26 EMA moving average. And the significance of this is since we reclaimed the 26-day moving average on the weekly time frame, and if we close above this 26 EMA tomorrow as well, then we are out of the woods and we are set to rally what they call it as Christmas rally or the Santa Claus rally. So I was very concerned about us getting a bearish crossover on the weekly time frame, but thankfully it looks like we are going to close the week higher. So this is a very bullish development as far as weekly time frame is concerned. And as long as we don't get a short moving average crossing from the top to the longer term moving average, that is 5 and 26, there is no reason to worry as far as weekly time frame is concerned. And as always, right now we are still in this green zone, that is the chop range that I was talking about. So the path moving forward on the weekly time frame may be choppy or maybe slower, but surely right now it seems we are out of danger as far as weekly time frame is concerned. So today was a very important recovery, and for the bulls credit, they reclaimed the 26 moving average. So today was a very important day for the weekly time frame. So now let's jump on to the daily time frame. So there are some key observations that I wanted to share. So on the daily time frame, the 200-day EMA acted as a very big support. And since this is the start of the new month, the pivot levels are also refreshed. So let me show you what do I mean over here. So when we go to the daily time frame, right, and as you can see over here, the 200-day moving average, that is the pink line, held it a very good support. So as long as I said yesterday in the video, as long as we hold the 200-day moving average, there is no reason to worry. So today the market action was really aggressive. And as everybody knows that today was a Fed meeting where Jerome Powell did not raise the interest rates, he paused. But more important than that, he had a press conference and where he shared his views on the monetary policy, the macro, and all of those things. So today I was sitting on the sidelines and I was just watching the markets and trying to learn what's going on. So as you can see, we did two important things today. We eliminated the entire range, that is this one that I was talking about, and we also eliminated the zone, the massive selling that came in last week. So now the picture going forward is we reclaimed 5-day moving average, that is this blue line. We reclaimed the 9-day moving average, that is this light blue line. And we also are closing today above the 13-day moving average, that is this green line. Now, as you can see, I have drawn a very important range box over here, which I call it as zone. So as you can see over here, this is very important zone for many reasons. It has holded the support once over here, twice over here, thrice over here, and now we are entering into again the same zone. So this zone is going to act as a very big, high volume battlefield between the bulls and the bears. So by any means, if we can close above this zone, then there is a very high chance that we test the 26-day moving average and the 50-day moving average. But the path going forward is going to be very, very hard. And why? Because now the inflation story or the rate story is out of the table. Now, since we are not hiking, we have seen that the Federal Reserve is pausing the rates. The only possible thing that is negative for the markets is if Apple comes out tomorrow with a very bad quarter earnings. Now, the probability of that happening is very, very low. And why do I say that? It's because if you see the big tech earnings in this earnings season, Microsoft, Google, Facebook, or Meta, everybody announced good quarter earnings. Now, good quarter earnings meaning beating on the top line, beating on the bottom line. So there are very high chances that Apple is going to beat on top line and bottom line. Now, even if they don't, give a spectacular quarter, even if they beat the estimates, then that is going to lay the foundation of a Christmas rally. So I'm just waiting for tomorrow's close as to, how the markets are going to react to the Apple earnings. And then once we close the week, we will get a very good insight as to what's going to happen. So if you talk about the chart, then this is very, very important range that the markets are going to consolidate on, or if they can form a very good base, then that would be really good. So my immediate next resistance is going to be this. That is the red line, that is 26-day moving average. So the price label exactly is this thing, that this is going to be a big level of resistance, and I would put it in the red line over here. So there are very high chances that we will test this in coming 2 days. So tomorrow is Thursday, then we have Friday. So there are very high chances that we will test this 26-day moving average in, let's say, coming 2 to 3 days. So this is my take on daily analysis, but kudos to the bulls. They actually reclaimed, this 150-day moving average. They reclaimed this zone and they came out very stronger. So now all eyes are on the Apple earnings, because now there is no major catalyst which is left, which can bring the markets down. Obviously, there are risks associated with everything. There can be a major escalation in Middle East, which can, bring down the markets. But as far as I see, I don't, see that major escalation happening. And as far as I can see, we are really nicely positioned to have a really nice choppy but a bull rally until December. So we might chop around, but my thesis is I don't. We have seen the low for the year, and that is going to be 14,142. That is this one on October 26th. So mark this as the low of the year, because I have a very strong probabilistic insight that this is probably the low of the year. Remember the W pattern I was talking about in the yesterday's video? So like whenever the bottom forms something like this, so I was hoping for a W pattern form something like this. The only thing that can happen, the only thing that can, bring this W pattern back is if, Apple comes with a very bad quarter, or they come with a very nice quarter and then they guide lower. So that can be, a reason to form a W pattern. But in any case, even if that W pattern happens like, this and this, so this low, I think the 200-day moving average would correspond to a very nice support on that low. So I will stay, alert, and let's see how it reacts. But as of now, as I said last week and last to last week as well, that even for swing traders and even for long-term investors, probably this was a really good buying opportunity. So now let us turn our attention to the intraday time frame. So today I was sitting on the sidelines just because of the Fed meeting. So remember always that whenever there is an FOMC meeting or whenever there is a Powell speech on the day, it tends to be very, very choppy, and it tends to give you very unclear, trends. So it is very advisable to actually reduce your position size on the days like these. So that's exactly what I did. But what I learned from today is today was a 20-day for a very shocking, reason. Normally the FOMC days are very, very, choppy. So let's jump on to the, intraday time frame. So over here in this chart, this is a 5-minute chart, and you can see over here that we started on 6:30 PST, that is Pacific time, and the levels that I had was the pivot level R1 and pivot level R2. So as you know, I don't trade, in the first 30 to, 45 minutes of the opening session. The reason behind that is, there's a lot of, data releases and news events in the first hour of the day. So that's exactly what I did. And what I noticed is like after 7 o'clock, it was comfortably closing above R1. So I thought if it's comfortably closing about R1, then the next resistance has to be R2. And that's exactly what happened. There was a massive green candle of 45 points. And then along the R2, it kept on chopping. So as you can see over here, one key observation that I did is just after it got rejected from the R2 level, it did nothing the entire day until the Federal Reserve Chairman Jerome Powell started speaking. So as you can see over here, after the R2 level got breached, the volume started slowing drastically. So if you see over here, the volume just got absent. The reason is the market was anticipating what the Federal Reserve is going to do. So that is why you see an unusually low volume from 7 o'clock to the interest rate decision on 11 o'clock. And then after 11 o'clock, when the Federal Reserve announced the pause, and then at 11:30 Fed Chair Jerome Powell started speaking, look at the action. So this is what happened when he started speaking, and when he got into the Q&A section. That is exactly when we saw a massive rally. So this is why I tell people, like, try to avoid trading intraday, on the days like FOMC, because you never know, a single statement from Powell can, trigger the algorithms which are running on intraday, and it's so much volatile. So this is my take on intraday. The key observation that I did was it quickly got to the R2 level. Then it was just chopping around in this zone with a very low volume, and then after Powell started speaking, it was crazy ride upwards. But you noticed, like, when the FOMC press conference started on 11:30, first it went up, then it went down, and look how much did it went down. So it went down almost 120 points, and then it recovered the entire 120 points, and then again it closed even higher. So this is the impact of central banks on the capital markets. And this is why I wanted to share that in real time with you, with the latest actions. So this is why the even a smallest statement from Fed chairman is important. And so this was my key observation, yeah, that I really did not trade today. I just traded few contracts, and that too with a very reduced position size as of normal. So I just wanted to share this intraday insights. So in the end, I just want to say that keep learning, keep growing, and thank you so much for watching. And if you find quality content related to financial markets over here, then please feel free to like, share, and subscribe. And until next time, see you guys tomorrow.